Welcome back. Let's look at your markets in Asia. Weaker at the close this morning as more disappointing Chinese economic data continued to weigh on sentiment. Investors are also awaiting Beijing's stimulus measures. Analysts say gains were capped by worries over a deepening property crisis. A lot of jitters around China right now. In Hong Kong, the Hang Seng slumping 0.34%. Japan's Nikkei falling 1.3%. While on the mainland, China's Shanghai index dropping less than 0.5%. Now let's look at Wall Street. It ended lower after the Federal Reserve's minutes showed central bank officials were divided over the need for more interest rate hikes in their last meeting. So that means there could be another rate increase. The minutes of the Fed's July meeting showing most policymakers continue to prioritize the battle against inflation, throwing in uncertainty for markets over the outlook for rates. Essentially, the S&P 500, the S&P losing 0.7%, the Nasdaq down more than 8%, and the Dow Jones industrial average down about 0.5%. Okay, so let's bring it home. The JSE is spending another day in the red, as you can see, down about 0.5%. Concerns around China and that possibility of yet another interest rate hike in the United States has actually weighed on local and global markets for days. The rand trading well above 19 rand to the dollar after opening this month, by the way, at 17 rand 87 to the dollar. The latest hit is business confidence declining between June and July. It's been falling every month this year due to higher interest rates, power cuts and lower trade volumes. So some of the numbers, the all-share index down 0.5%, as I said, 74,556 points or so. The industrial average down slightly, financials weakening 1%, the top 10 resources index slumping 1.3%. Markets in Europe also down. The FTSE in London has shed 0.1%. The CAC in Paris down by the same margin, and Germany's DAX slipping 2 points. Commodities finally, gold trading at $1,896, platinum at $889 per ounce, while the price of Brent crude oil is at $84.20 per barrel. The rand right now, let's see, 1906 is the latest number, 24.30 to the pound and 20.75 to the euro. All right, some important results have been released today. Gold miner Gold Fields is deep in the red, down more than 7% after it reported a 12% drop in half-year profits. Like Anglo Gold, Gold Fields has shifted focus away from South Africa to focus on more lucrative mines in Ghana, Australia and the Americas. Standard Bank also was down a short while ago. It released interim results. Standard Bank is Africa's biggest lender by assets, and it says its profit jumped by more than a third. It does say that the higher interest rates offset an increase in bad debts. Remember, looking at the banks, we're seeing how many of their customers simply cannot pay their debts. To discuss, we're now joined by Patrice Rousseau, who is the CIO at Ashburton Investments. Thank you for being with us, Patrice. There's a lot of bad news around. Let's start with the Gold Fields results. I mean, they are expanding elsewhere, but not looking too good at home. What do you take out of those results?
Good afternoon, Francis, and to your viewers. Yeah, disappointment from Gold Fields with the gold production slightly down. That's due to lower grade. Again, gold mining is not easy, especially at deep level in South Africa, and I think that's what we're seeing. And that's translated with the drop in profits in dollar terms. I think if you were to look at the profits in rand terms, the picture would look different. But I think that the issue remains with gold miners being capital intensive and finding it very difficult to deliver free cash flow and good returns for investors. And in the case of Gold Fields, we also have their chief financial officer stepping down, retiring, and he's been there for quite a while, since 2008.
Gold Fields says it is on track with this big project in Chile. I mean, it's looking at Ghana, Australia, South America, North America, Canada. What does that say about confidence in South Africa?
Yeah, I think it's a good point. Firstly, I think you have very different ore bodies in South Africa versus the rest of the world. So South Africa is deep level mining. It's getting to a point where it's extremely difficult and dangerous to go several kilometers down under the ground. The jurisdiction and the ability to get mining permits is very restricted in South Africa, and the ease of doing business. Plus, you have load shedding, and there's always a risk that while production has been going on, that if things get worse, for instance, even the miners will be impacted by that. So a lot of them preferring to diversify away from South Africa, as you mentioned, into areas where they see more growth potential. West Africa is one, and Latin America another. And that's true for most of the gold miners that we have.
And that's about history, the fact that the mines are so deep by now. So what role governance and power cuts and things like that, or is it only about the deep mines?
Yeah, I think it's one story of grade and cost to do this. And obviously, the management always want to have to focus on the safety of the workers. So deep level mining is really difficult and dangerous, which means that they rather invest capital elsewhere where they see more potential and maybe easier mining conditions.
All right, Standard Bank, their profits went up, and with the banks we've been looking at the bad debts. I mean, how is Standard Bank faring against the other banks right now?
Yeah, really the standout results, I think, so far with earnings up 35%. I think there we have to recognize that the rest of Africa for Standard Bank really paying off with strong numbers, up 65%. But even South Africa standalone, their earnings were up 17%. So Standard Bank doing really well across the board. And then they've benefited from higher interest rate, and that's called the endowment effect, through their margins expanding, which we see net interest income up 34%. So excellent set of results. Maybe surprising that the share is down today, but they had already indicated to the market in terms of their guidance that their earnings would be up, but they delivered earnings at the top end of guidance at 35%.
Yeah, I was going to ask you why the share price is down. We'll see how it plays out by the end of the day. Let's look at the market overall. Now, the prospect of higher interest rates in the United States are weighing on global and our local market. Just explain how that works.
Yeah, I think if you follow what market participants were expecting, I think firstly there was an expectation that the Fed would be starting to cut rates this year, and then I think with inflation being more persistent and more sticky, these were being pushed out and now well pushed out into next year. So and last night's Fed minutes clearly shows that the governors are now saying that they're not looking to cut rates. Actually, they might be looking to hike rates if inflation doesn't come down. And what they look at is not the headline inflation number, but what they call a super core measure, which exclude some of the more cyclical items, like let's assume petrol price and the like. So this is still well above the target of 2%. This still the core measures are still 4% and above. So the Fed is likely to hike first if it's not satisfied that inflation expectations are coming down and that the core number is coming down at a rate which will mean that they will achieve the 2% long-term target.
And of course, higher rates there make us relatively less attractive. But there's several factors here. Looking at the rand, how weak do you think it can go?
Yeah, always a difficult one. I think if you look at what happened earlier in the year, there was a lot of the political risk being priced in around the Lady R issue. The rand started recovering, as you mentioned, at the beginning of the year, of the month at 1780. But now I think the China story is weighing on the rand. There's kind of an emerging market risk premium being priced in.
All right, thank you very much. Patrice Rousseau is CIO at Ashburton Investments. We'll continue to explore the BRICS economy, this grouping. We are a very small part of it, but overall representing about a quarter of the world economy. What are the opportunities heading towards next week's summit? And lots more coming up for you.